What I'm going to do for the next couple minutes is focus on one particular carbon market, the quirky cousin of the regulated markets, which are the voluntary markets. And these are the markets when you're riding an airplane and there's the option to offset your flight, or a company goes carbon neutral. They're engaging in these markets. And really there are two main parts of the voluntary carbon market. The first is something called the Chicago Climate Exchange. And it's a voluntary but legally binding cap and trade system based in the U.S. It's membership-based and it has its own standards. And different companies trade between themselves in this cap and trade system. There are also offset credits that companies can receive from outside of the cap. And then operating outside of this CCX is something that we call the over-the-counter voluntary market. And in many ways, this could be is very chaotic, and it operates outside of any formal exchange. And there are a range of different standards and different types of credits. And it's almost completely based on offset credits. There are some cases where companies buy regulated level credits and use them in a voluntary manner, or CCX credits and use them in a voluntary manner. And these really interesting market really represents the consumer demand for voluntary offsets. It's also received quite a bit of attention in the last couple of years and quite a bit of controversy. So many articles describing the voluntary over-the-counter markets as the wild, wild west, or buyer beware. And this is a quick slide showing the big universe of the carbon markets. It's not to scale at all. And the markets that one focused on are those two little blobs in the lower right-hand corner. And in particular, the voluntary over-the-counter market, which in many ways could be considered more of a splatter than an actual circle because there are so many different types of offsets in the market. And because this market is so scattered, it's been had a lack of transparency, which is one reason in 2006 we created the first book on the voluntary carbon markets for EarthScan, which is voluntary markets. And the goal of the book was simply to provide a qualitative analysis of these markets. A year later, we decided what was also missing was a more quantitative analysis of this market, because we knew really the answers to really basic questions, such as how big are these markets, or what are the types of credits going into these markets, or what are the average prices. And so for now 3 years, we produced a report called State of the Voluntary Carbon Market, where we've tried to track as best as possible what's going on at a quantitative level as well as a qualitative level in these markets. So if you look at this slide, you can see a couple of different things about the over-the-counter voluntary markets. And the first is that while these markets have really just come into the limelight in the last couple of years, they've been existing since well before 2002. In fact, we saw some of the earliest deals in the voluntary carbon market as early as 1988 and 1989. And then it was a fairly robust market before 2002. In 2004, you can see the entry of the Chicago Climate Exchange. And between 2006, 2007, and 2008, you can see the growth of this market, and especially the growth between 2006 and 2007 of the voluntary carbon market. This trend changed last year where the CCX actually grew more quickly than the over-the-counter market. However, the actual values of the market, the OTC market actually had a higher value than the CCX because of the higher prices in the market, which we've also been trying to track. And have gone up each year in the over-the-counter market. So in 2006, it was a little over $4 a ton. 2007, a little over $6 a ton, and now we're seeing it over $7 a ton. So this increasing prices across the market, which I think is due both to increased demand in the market and an increased use of third-party standards and third-party registries and other tools to help ensure the quality of these credits that also add expense to the process of creating credits. And this slide is just to put the voluntary carbon markets in context. You see all this growth going on, but there's still less than 1% of the size of the regulated market. So we remain really a small niche market. And in many ways, their strengths are not so much in the volume of emissions reductions, but really as a place of incubation for new ideas. And so creating standards in the voluntary market for different project types, for example, that might not be accepted in the regulated market.